Hello, in this video I'm going to be covering the sole trader question. It's from the accounting paper 2018. So what I've done is I've just reconfigured the trial balance and the additional information into an Excel sheet here. Okay, so with well, firstly you're required to prepare a trade and profit and loss account for the year ending 31st of the 12th 2017. So this is what your template looks like to get as far as your gross profit. First thing we'll do is get our sales account. So we have 583,000 for sales. I always advise learners to highlight the different elements of your trial balance when you have taken that information out. So when you've extracted that information, highlight it so you know you've actually adjusted it. So it's 583,000. So we have sales returns. This means some of our customers weren't happy with some of the goods we sold, and the sales returns, which are returns in, they're coming back to you, are 13,000. So 13,000. So that's an adjustment you have to do. So just take the returns away from the sales. You should get 570,000 euros. That's this adjusted sales figure. Now, next thing we want is our cost of sales. The first thing your cost of sales is always your opening stock, the stock you had at the start of the year. So if we look here, we can see our purchases are 192,000 euros. Sorry, my mistake. We'll actually get our opening stock first. Which is 27,000 euros. So our opening stock is 27,000 euros. Okay, and next then we look at our purchases, which is 192,000 euros. Now I'll put this into the left column. The reason being is that I have an adjustment here, and when you have your adjustment, then the adjusted figure goes into the middle column here. So the adjustments go in the left column and the adjusted figure goes into the middle column here. So we'll get our purchases returns, which are 5,100. Okay, and then we'll take the 5,100 away from the 192,000 and we'll get 186,900. So this is the adjusted purchases figure and this is the stock. So if I add these two together, that'll give me 213,900. I have to take away my closing stock. Now it's a good idea always that when you put down closing stock, put less closing stock. The reason being is that over time, if you keep writing less closing stock, you remember, well, less means take away. So it's a good habit to get into. Closing stock is the stock we have at the end of the year. That stock will be used for next year's trading. It won't be used for this year's trading because it hasn't been sold. And the closing stock figure is always given here in your additional information, and it's 21,000. Okay, so if I take this away from my cost of sales, so I now have my adjusted cost of sales. So the last thing to do to get your gross profit is just take away your cost of sales, less closing stock, away from your adjusted sales figure. So my gross profit is 377,100. Okay, so we've gotten our gross profit. So next thing we want to do is get our net profit. Okay, so to do that we have to get our expenses. So we get less expenses, and with your expenses, then you have to break them up into your administration and your selling and distribution. So we'll just do the administration first. First one we have, if you look here, is, remember, this is your debit column here, and this is your credit column here. In your debit column, which is this column here, you have all your assets and expenses. Okay, so this is what we're looking at here. So the first one I look at here is my wages and salaries. Okay, now there's no adjustment for wages and salaries here, so I can just put it in as it is. So wages and salaries is 108,000 euros. So wages and salaries is 108,000 euros. Okay, so next then we have our general expenses. Again, I don't see any, yep, there is no adjustment for your general expenses either. So we just highlight that then as well. We've put it in. General expenses, 12,500 euros. €12,500. Okay, so next then we will look at our stationery of 4,200. Now just bear in mind, I can see up here that there is an adjustment needed for this because, well, the stationery throughout the year, you know, your staplers, your paper, your ink for your printer, etc., costs 4,200, but at the end of the year there was stock left over, so this stock here will be used next year. So what I'll do is I'll just make an adjustment here. So I have 4,200 euros of stationery, so let's call it working one. And my stationery, let's check that figure again. I think it was 4,200. Yep, 4,200. Okay, less closing stock of stationery. Okay, and that was 1,300 euros. Okay, so this station will be used for next year, so it's not part of this year's accounts. So adjusted stock. Sorry, my mistake. Adjusted stationery. $2,900. So stationery then here. Let's zoom out a small bit. Stationery is €2,900. So the next thing we look at then, our next expense is our insurance. Okay, so insurance is 8,200. But if you look up here, it says included in insurance is a check for 900 euros, which is for M. O'Reilly's private house insurance. That's his private house. It has nothing got to do with his business. Therefore, we have to take it out. So let's come up here to my workings. Workings 2. And I put in my insurance. Let's check them out. That again, it was 8,200. And we have to take out 900. So less private house. So take the 900 away from the 8,200. And this is our adjusted insurance amount. Okay, so that's my insurance done. So I'll come back here to my trial balance. Again, just a brief recap. Everything on this side of your column, I'll just put it here, will be a debit, and this side is a credit. Okay, just to make you aware of that. And everything on this side, a debit is either an asset or an expense. So these are all assets here, which means they will go on the balance sheet. Same here again, an asset. The next thing now, loan interest paid will be deducted off your net profit. Okay, here bank, an asset. Advertising is an expense, but it's on the selling and distribution side, not on the administration. So again, look up here, I have provision should be made for interest due on the loan. Again, that will be deducted off the net profit. Advertising, again, that's an expense, but it's associated with selling and distribution. So here brings us over to depreciation. Okay, now buildings will be admin, delivery vans will be selling and distribution, and office equipment. For a purpose, I suppose, of just the depreciation side of things, I'll do all of these together. Okay, so first thing is I'll just go into my workings and working tree. Okay, and we're going to look at buildings. Okay, so the first thing, buildings cost 400,000. So 400,000. Remember, depreciation is the reduction in value of an asset. Okay, just like if you buy a car, for example. If you bought it for 10,000 euros, the following year it will reduce in value due to wear and tear, amongst other things. But generally, assets like that depreciate. Now it's saying that, okay, firstly, that's the cost of the buildings. So if I look here, we don't have accumulated depreciation on buildings. Okay, so it just says here it's just 2% of cost. Okay, so we'll just go into our costs, and we'll just get 2% of this. So equals 400,000 multiplied by 2%. That's 8,000 euros. So depreciation for buildings. So buildings, €8,000. Okay, and just again highlight that you've actually covered this. Okay, because it gives you kind of reassurance as well in the exam that you've covered all the additional information and you've included all the elements of the trial balance. Next one then is delivery vans. So I'll just come in here, let's work in 4. Delivery vans, and what it's saying to us, it's 10% of net book value, right? So this means you'll have to get the cost, accumulated depreciation, and then from there you'll work out the net book value. So if I come up here, firstly, I have delivery vans that cost is 64,000 euros. Getting accumulated depreciation is 64,000 euros. Sorry, my mistake. It's 12,000 euros. That's 12,000 euros. And then that will give us the net book value, MBV. So I'll just get the cost. So the net book value is 52,000, and what it says is to get 10% of this. Okay, so the charge for this year 10%. Just to check it again. Yeah, 10%. It'll be 5,200. Okay, I've done it in my head, but you'll be sure to use your calculator in the exam. So 52,000 multiplied by 10%. Yep, 5,200. Now, we won't put this in yet because that's part of the selling and distribution expenses. Okay, so I'll just leave that for a moment. And we'll move on to our next depreciation charge, which is office equipment. Okay, so office equipment. Okay, and it's telling us that it's 20% of cost. Okay, so it's just straight 20% of cost, and our equipment cost 20,000 euros. That's equal to 20,000 multiplied by 20%, which is 4,000 euros. So if I come in here, then I just put my office equipment depreciation. Okay, let's make this a small bit bigger. And the charge for this is 4,000 euros. So the next thing to do then is just total up all of our administration expenses. Okay, you'd obviously have to use your calculator for this. In Excel I can just use my auto sum, but in the exam you'll have to add all these up. So if I add all these, I should get 142,700. So add all these, into this column here you'll put the total. Okay. So next then I'll want to do is my selling and distribution expenses. I'll just create a small bit of room here. Okay, so selling and distribution. Okay, and just keep it in red font as well, just to be consistent. Okay, so if I come over here, my workings I've already done the delivery vans depreciation, which is 5,200. That is 5,200. Let's check that again. Yep, that's fine. So I've done all of my depreciations now at this stage. Okay, so they're all done, so I can just highlight those. So just having a quick look at my trial balance just to check if there's any expenses I haven't done, and yes, the last one here is advertising, 5,400 euros. And let's check. Usually there's additional information in advertising, and it says here advertising is for the year ended 30 to the 4th 18. What this means is that our profit and loss account ends at the 31st to the 12th 2017, but the account for advertising carries on until 2018 for January, February, March and April. These 4 months are for a charge for 2018, so I have to take out 4 of the 12 months that I've paid for and include that in this year's accounts. So in other words, I've paid for 12 months of advertising, but 8 of those are in 2017, 4 of these are in 18, so I need to make that adjustment. So I'll just call this workings 6. Call it advertising. And so my advertising charge is 5,400. As I said, I'm only getting use of 8 of the 12 months that I've paid for. So just to make this clear, I'm paying advertising for 1 year, for 12 months, but the problem is that the account and the payment is being carried into 2018. In accounts, in your trading profit and loss, it's only concerned with 2017. So for January, February, March and April of 2018, I need to take those out, extract it out of the charge, and only include May, June, July, August, September, October, November, December of 17. Okay, so I'll get 8/12 of this. So advertising charge, so I'll get my 5,400 divided by 12, and multiply it then by 8. Okay, so I'm breaking it down to months. That's why I divide it by 12, and there's 8 months multiplied by 8, and you get 3,600. Check the amount again, 3,600. Okay, and I'll just add up my selling and distribution charges then. Okay, so here then I've added both my I've totaled all my administration expenses and selling and distribution expenses. So if I go into 2018 here on the trial balance, just to note as well, on the provision for bad debts, okay, there will be a reduction in your bad debts, which means this will be perceived as a gains or additional income. So I'll just do the workings here. So working 7. Okay, I'll just zoom in there a bit, just to make it easier to see. Okay, so the bad debts as it stands, sorry, my mistake there, debtors are 36,200. Okay, 36,200. Now if we look at the additional information, it says they wanted to adjust it to 5% of the debtors. Okay, so bad debts provision is at 5%. Okay, so they're saying, of the debtors that we have, we'll probably get 5% of those that will be bad debts. Okay, so if I just find out 36,200 multiplied by 5%, that is 1,810 euros. Okay, but if you look here at the bad debts provision that we have so far, it's 2,600. The problem with this then is that it's too large. Okay, at the moment it's too large, so that means we have to reduce it, right? So that means that if I get my bad debts provision, and it's 2,600, that means we've overpaid, or decrease get 2,600. So we've overpaid by 790 euros, okay? Okay, so come back in here to the trading profit and loss. Sorry, what I'll do actually first is just highlight what I've covered, okay? So, we've already covered advertising, just to highlight that as well. Okay, and that has been highlighted as well, actually. That's been covered. Okay, so come back into my trading profit and loss. The first thing I'll do is I want to add my total expenses, okay? So I'll do that by just adding the selling and distribution. And add it to the total administration. Okay, now I just want to highlight here, let's make this bold actually just to make it easier to see. This is our gross profit as it stands. So the next thing that I'll do is I'll just bold this as well. So this is my total expenses. And I'll take that away from my gross profit. Okay. So I want to add my gains next. Okay, so just to add my gains, and I'll just do a small bit of formatting here. Okay, so the gains we had were a decrease in bad debts. This is seen as money in. That is 790 euros. If I come here then as well, by any other income, I do have my discount received. We were given discount on purchases. Okay, so that discount received is seen as a gain. Okay, so just to check that figure again, it's 1300. So discount received, that is 1300. Okay, so next thing is what's called your operating profit. And what I do is just add my decrease in bad debts and discount received to my 225,600. Okay, so the next step then is to get my net profit. Okay, now to get your net profit, you will usually have an interest charge that you have to pay for. Okay, and you take that off your operating profit. That will give you your net profit. So if I come in here, this is my sole trader, trial balance. It says here provision should be made for interest due in the loan. The rate of interest is 8% per annum. That's fine. And it says then in terms of the loan itself here, okay, that it was received on the 1st of the 4th 2017. This is very important because this says then that well, firstly it's per annum, right? The loan, that means it's a yearly charge, but the term loan wasn't received until April. This means that in January, February, March, we did not pay any loan payment then. So that means that you're going to take out 3 months of this year and you only pay for 9 months. Okay, there's 12 months in a year. First 3, we didn't pay any loan payment, so it's only the 9 months of this year. Now obviously we have a yearly loan to pay, but the following January, February, March of 18 will pay the remaining balance on the loan. So it's only for 9 of the 12 months for this year that we will pay on the loan. Okay, so the first thing is it's 60,000. Okay, so working is 8. And the loan is 60,000, I think I said, so let's check that again. Yep, and it's 8% charge. Now let's put 9 months, 8% charge. What I'll do actually first is I'll just do my 8% charge. So that's equal to 60,000 multiplied by 8%. And here I'll just say adjusted to 9 months. So I'll just get 4,800 divided by 12 and then multiply it by 9. $3,600. Okay, so come back over here, loan payment or interest pay. Loan payment is fine. Loan payment. What did I say it was? It was 3,600. Okay, and you take that off your operating profit. Oh, sorry, my mistake there. My Excel. 1 second. This is equal to this minus this, and that's our net profit. Okay, so we're almost finished our profit and loss account. The last thing we need to do is, if you see here, you have a profit and loss at the start here. This is kind of like your retained profit. It carries over every year. Okay, so profit and loss for the first of the first 17. First of the first 17. So this was the profit you carried over from the previous years. That was 51,400. So then at the end of the year, so if we get this year's net profit and the profit we had at the start of the year, we add those two together, we will get €275,490. Okay, so I'll just put these in bold here. My net profit as well. That's important to highlight that. Okay, so that's your trading profit and loss account. Okay, so the first thing was to get our gross profit. Again, you always have a standard template like this. Sometimes you'll have carriage inwards as well, which will be added to your stock and purchases. So, and just to bear in mind, if you ever see carriage outwards, it's an expense and it will be in your selling and distribution. That's your gross profit. Expenses then, you break them into administration and selling and distribution. Like for example, delivery vans, well, you know, that's taking your goods out into customers, and your advertising charge as well. It's, you know, with selling your goods. So just be aware which expense goes into administration, which goes into selling and distribution. So at that point then you take away your expenses away from your gross profit, and you'll add gains. Okay, bad debts, discount received, sometimes there might be rent received there as well. That will give you your operating profit. Then any loan or interest you have, you take that off your operating profit. That's your net profit. Okay, and then your profit and loss at the start of the year, you add it to your net profit from this year, and this is your profit and loss going forward. Okay, so I'll just maybe minimize this a bit more. It might be better to see it there. Okay, so that's your completed trade and profit and loss account for the sole trader for 2017. Sorry, my mistake. Yes, for 17, and it's for 2018 question. Now just look here and just make sure you have everything highlighted going into your balance sheet next. I have that done. So I've all my adjustments done here. These will all be in my balance sheet here. Creditors, debtors, yeah, VAT. VAT, you can see it's not in the expense column, it's in the credit column, therefore it's a liability, it hasn't been paid yet. Term loan, interest paid. Now just on this actually, I just want to bring this to your attention. We have already paid some of the loan, okay, so when I come over here and look at my loan payment, it was for 3,600, but we've already paid 1,500, so we'll make an adjustment when we go to our liabilities on the balance sheet, and that is, yeah, and oh yeah, I'll just highlight this as well, and this makes it much easier then doing our balance sheet next. And just the last thing, if you look, it's 80 marks just through the profit loss account. So you're off to a really good start if you can get that bit done. Okay.